Once regarded as one of the most secure investments, gold bullion prices have not just toppled but dived. Is there a floor to this commodity panic? Peter Brandt joins me. First, Peter, we know that the Fed rate hike could be putting all that much more pressure on this asset. Is the situation being exaggerated by market watchers?
Gold traditionally has been a favorite of a lot of investors. It's fallen out of favor really since the end of 2013. There are a lot of gold bulls out there that seem to be in the closet. I do not see a bottom in gold anytime soon. So I think to some degree as a trader, and keep in mind, I look at it as a trader, not as an economist, not as a global macro guy. As a trader, I look at gold as a market that needs to be shorted, need to remain short.
If we talk about the Fed rate again, right? Coming in September, if that rate is to indeed go up, what sort of moves are you anticipating for the market?
That's an interesting question because over time it seems that gold becomes correlated with one way during one era and another way during another era. I remember way back when I started trading that higher rates represented higher gold prices. I remember times when higher rates equaled lower gold prices. And so I don't think there's anything historically sacred between the link of gold prices in correlation to interest rate policies. The market fixates on these relationships and considers them to be sacred. They're not sacred at all. One can make the case that higher rates by the Fed really should equate to higher prices of gold because it represents an attempt to dampen inflation.
If gold is no longer the gold standard, in fact, for reserves even at a central bank, what is the future?
Ultimately, there has to be some raw material or some instrument that represents long-term a store of value, particularly in that we have seen central banks around the world printing currencies. We've seen the world flooded with paper money. And ultimately, I think that there is a case to be made as we see more and more paper money that ultimately gold has to reflect a store of value in relationship to the world currency float. And I know some very sophisticated traders who actually trade gold long term. And I'm talking about the accumulation of major positions in bullion based on a mathematical formula that includes above ground gold supply, gold price, and currency in circulation by the major G countries. I think they can be made while I'm, as a trader, short gold and have been trading short gold for now almost 3 years. Long-term gold prices are going to be a tremendous value at some point.
So, Peter, is this a marketplace that disadvantages the individual investor and props up the institutional?
I think you have to look at gold as really an insurance policy against a lot of bad things that can happen economically. I think people who are well financed and of high means really need to commit somewhere between 5 and 10% of their assets to precious metals, among some other raw materials. Items.
What you're suggesting is that these prices are sort of cyclical in nature, and that when our grandkids inherit gold from us, they could potentially see a different sort of a marketplace. But economists are suggesting investors have just found better avenues for, their investments. For instance, they're looking at ETFs as well as other credit products to make those shorter moves.
Whether gold is down or up, if I purchased it in the right sort of longest term perspective on gold, I can't really compare it to how I'm doing in ETFs, how I'm doing in the stock market, how I'm doing in fixed income. I think it just has to be treated in an entirely different way.
But surely there's a multiplicity of options out there, Peter. So how do you get a laser focus among investors who at the end of the day are going to be finicky?
Well, I think finicky is great. I mean, if we break $1,000, I think we'll see the last of the gold bulls come out, give up. The fact that the investor, the average investor, is giving up on gold and silver is all the more reason for me to want to accumulate physical gold and possibly physical silver on periods of weakness. When the average investor wants out, I want in.